Hi, it's Nero here from Investment Rise, and today I want to do a bit of a deep dive into our various property markets, how they performed over either the last quarter in 2021 or how they performed over January. We're going to look at things like how much our prices are rising across our different markets, how much rents are rising, where our rental yields are rising. So we're really going to give you a good overview today of where the market is right now. Plus, as we go through the data, I'm going to share with you what I would do with that data, how I would analyze it and use it as the foundation for my property investing research, I guess based on my now 20 years of experience investing in different markets all around the country. And this is how we begin our research when we're helping clients, which I've been doing now for the last 12 years. So we've got a lot to get through. So let's begin by first looking at the data from CoreLogic's Home Property Value Index as at the end of January. Now again, we're going to be focusing only on the houses column. If you've been following my work for any length of time, you know that I'm a big proponent on focusing on houses over units. We saw in 2021 that the rate of price growth in houses far exceeded the rate of price growth in apartments, and that even in the same suburbs, houses and units do not perform the same way. So we generally want to focus on houses. And so if we look at what's happened, now we know that in 2021, prices across the country rose significantly. So looking at this column here, which says houses percentage change year on year, doesn't tell us too much in and of itself because we know all the markets performed well, okay? But what I want to do is I want to look at these two columns side by side. So I want to look at the percentage change year on year and then the percentage change month on month. And here's why. Let's look at Sydney. So Sydney in the 12 months to January 31, 2022, house prices grew by 29.8%. Okay, so that's great. That shows us how the market has performed to date. But as we know, past performance is no guarantee about future performance and what's going to happen in the future. All right. But what I want to do is have a look at whether these are the markets that are going to be easy to find properties with good growth potential in or not. And how do we do that? Well, what I want to look at here is the rate of price growth. Is it accelerating or is it decelerating? So how do we do that? Well, if we go back to the Sydney market and say, look, Sydney house prices rose by 29.8% in the last 12 months. Well, if we divide that by 12, we will get a figure of roughly 2.5%. So that means that if the percentage change month on month is about 2.5%, or maybe a little bit less, a little bit more, it's within the range of a market that's still growing strongly based on annual results, okay? But here you can see that we have a growth rate in Sydney of 0.81, okay? So that means that we're clearly in a deceleration phase, right? Now, that doesn't mean that there aren't going to be suburbs within Sydney that won't rise in value. There absolutely will be, and there absolutely are suburbs that are still rising quite strongly. But what it shows, it's going to be harder to find suburbs with good growth potential, okay? Melbourne, we see an annual growth to the end of January of 17.78. So if we divide that by 12, we'd want to see monthly growth of about 1.5%. Okay, that would indicate that the growth is still strong and maybe even set to keep accelerating. But we can see that Melbourne's price growth was only 0.51%. So that suggests to me that, again, Melbourne is in a phase right now where the growth is decelerating. Okay, and look, this is just based on data, all right? I'm not looking at what people are saying in the headlines. I'm looking at the data here and saying, okay, based on this, are these market's going to offer lots of opportunity for us to focus our research? And the data is showing just in this couple of minutes that it may not be worth looking at these particular markets, especially if we look at some of the other factors I'm going to cover later on, okay? But then if we look at Brisbane, house price growth, 33.09% for the year ending 31 January. House price growth for last month in January, 2.51%. Okay, so if we divide 33.09 divided by 12, we're going to get around about 2.7 thereabouts. And we can see that the growth in Brisbane is 2.5, which is pretty close, okay? So it still suggests that the Brisbane market has a lot of room to run from a growth perspective, okay? It's no wonder many people are expecting 20% growth in many areas of Brisbane in 2022, and I would definitely agree with that as well, okay? Adelaide, we can see annual growth 27.33%, but for the last month 2.29, which is again pretty close, because if we divide 27.33, divide that by 12, that's going to give us round about 2.3, 2.4, okay? Again, I'm just doing these in my head at the moment as we go through, but you're going to get pretty close. So again, Adelaide is a market that still shows good growth potential, okay? Perth, 11.38% growth in the house market for the last 12 months, 0.73 for January. Again, so if I divide 11.38 divided by 12, I'm going to get pretty close to what it actually got. So that shows that the Perth market is still looking strong. Of course, it's not looking anywhere near as strong as, say, Adelaide and Brisbane based just on this data, but what it does show is that you can expect Perth's median price to rise just based off this data. So really what you can see is just from this quick snippet of data, Brisbane market, Adelaide market showing great signs for growth. Perth is as well looking strong based on its history, but nowhere near as strong as, say, Adelaide and Brisbane right now. And we see that reflected in articles we're seeing in the media. So here's one that I just picked out. It's from 1st of February this year, and it says, Melbourne house prices surpass $1 million. Sydney values continue to rise in January. The nation's most expensive property markets bounced back in January, with Melbourne's median house price pushing above $1 million for the first time, and Sydney home values hitting another record high. Brisbane continued to be the strongest city for house price growth, with values up 2.5% over the first month of the year, CoreLogic data released on Tuesday morning shows. On an annual basis, Brisbane's median house price increased 32.3% to $809,813, right? And so relative to Melbourne, relative to Sydney, Brisbane prices are still looking quite cheap. Okay, and Adelaide prices are cheaper again. So that's house price growth. And yes, that's very important for us because ultimately our wealth will be created by getting good capital growth, which results from house prices growing. But what about rental returns? Okay, we want to see as well, which markets are giving us the strongest growth from a rental perspective as well, so that we can still get that good strong cash flow and we can hold on to our portfolios for as long as possible. All right, so this data again is from CoreLogic, all right, and it looks at the changes in rent across all dwellings. And so what you can see here is that Sydney has a median rent of $605, yet we know that median house prices in Sydney are around about $1.4, $1.5 million, depending again which data you use, okay? But you can see that the rents in Sydney have risen. This is across all dwellings. So this is not just houses. This is houses and units combined, all right? But we can still see rents have risen 0.3% in January, 1.8% for the last 3 months, and then 9.2% increase in rents across the last 12 months. Now, I expect if we then divvy this up between houses and units, you're going to find that the rate of rental growth in houses far outperformed what happened in units, okay? But still, this gives us a very good idea, all right? So if we go forwards and then look at what else has been happening across the country, Melbourne, rental-wise, has been the weakest performer. There's 0.4% growth in the last month. Still, it's growth. The rents have risen 1.2% for the quarter and 4.1% for the last 12 months, okay? But what's interesting is that with Melbourne house prices, as you saw from the previous slide, having risen to over $1 million, the median rent's only $456. Okay, it's in fact right now, when you look at all dwellings, it's actually the second cheapest, with the cheapest market being Adelaide at $447. Now, I think if you go and look at the data for houses only, you'll find that Melbourne might even now be the cheapest market to rent in. Okay, now that isn't obviously a good sign for us as investors if we're looking to find the markets that give us the best potential for both capital growth and rental returns over the longer term, right? Okay, so, and I've said this before, I think that the Melbourne market is probably the market that I think is the weakest at the moment in the country, especially with the oversupply And not if, but whenever interest rates rise, I expect that Melbourne will be affected more than any other market around the country. Okay, and these are things you want to be aware of when trying to work out exactly where you want to invest. Okay, now if we also then go further and look through the data, what we can see is that Perth was the only market of the capital cities to have recorded an increase in rental yield. Now, is that a good thing or not? Well, it really depends on what your goals are, okay? Because if rental yields are rising, what that means is that the rate of growth in rents is exceeding capital growth. Okay, that's why at the moment rental yields generally across the country have fallen, because price growth has exceeded rental growth. All right, and so really you need to be clear on what are you after here. Okay, personally, and our philosophy when we're helping our clients is we want to help our clients invest in areas with the best scope for capital growth, while also ensuring it doesn't affect their lifestyle. And really we want to make sure those properties are looking after themselves, where the rents are paying for the mortgage and all associated expenses, right? So as long as we're having that, we're going to be going towards the capital growth, not just chasing rental yields for the sake of chasing rental yields. And one more thing, if we come back and look at the data here, what you can see is that if we combine all the regional centres across the country, in the last 12 months, rents have gone up 12.1%, okay? Far exceeding what all the capital cities have done when you combine them at 8.4%, okay? But that is continuing, because in the last quarter, regional rents rose at 2.5%, far outperforming capitals. And even in the last month, regionals rents have increased more than capital cities. So what that shows is that obviously you're able to get more in rent from regional areas, but remember, these are combinations. Okay, so this is taking the whole country as a whole. All right, there are many regional areas where rents have increased far more than this, and of course other markets where rents have not increased at all. Okay, so really, again, if you're looking to invest in some of these regional areas, make sure you're also considering the capital growth factors. Okay, is demand greater than supply? Is there good jobs growth within the actual area you're investing in, or can someone commute within, say, an hour, maybe an hour and a half max, to where there's good jobs growth, for example? What about lifestyle? All those key things you want to look at. But generally speaking, if you look at what's happening across the country, the key thing is that prices are still rising. Okay, but as I've said before, 2022 is going to be a very different year to 2021. In 2021, prices rose pretty much everywhere across the country, right? And whether it was coastal areas, capital cities, regional areas, didn't matter. Prices grew everywhere. That's actually quite unusual. If you look at the data over, say, the last 30 years, even the last 50 years, generally speaking, markets are in different cycles. And so we're going to start seeing that in 2022, where different markets are going to perform differently. Some markets are going to perform very, very well. Others are going to plateau. And so that's why you really want to start looking at data here. Don't just assume that what happened in 2021 is going to repeat itself. It's not. But if you do your research, what you can see from just what I've shown you here is that there are still markets with great scope for capital growth. There are still markets where rents are rising and where you can get properties that are rising in value with strong rental yields that will cover the mortgage and all your expenses, so that you're not out of pocket each and every month. Okay, so don't be scared by what you're seeing in the media. Look at the data, base your investing decisions off data, and if you do your research, I believe you can find some great opportunities in 2022. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio That Pays You an Income Each and Every Month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. click the link below.